Welcome to this week's Fireside Chat with Jesse. I am joined today by Jay Lease, Chief Banking Officer at Choice Bank Equipment Finance. Thanks for joining me, Jay.
Thanks for having me, Jesse. It's a pleasure to be with you.
It's great to have you on the program, sir. It's been a long time coming. I think Gary Peterson introduced us probably last year at the ELFA, and excited to hear more about your story and what you guys have going on at Choice Bank.
No, Gary he's going to be upset with me, but I referred to him as the Taylor Swift of the ELFA as we were walking through the ELFA in March this year. Every person we walked by stopped and wanted time with Gary because he's kind of a legend in the industry, and he had a great career with TCF and GE in his past, and so he introduced us. He introduced us to many of our current clients, potential clients as we go forward, vending partners to consider to partner with. And so I didn't really get to walk through the building real quickly with Gary. We stopped about every 2 feet to talk to the next person. And so Gary is someone that we are engaged with as a consultant in this business. He's helping us kind of lift this off the ground, but I think you should refer to him as the Taylor Swift of the ELFA or the equipment industry.
All right, we're gonna have some fun with that.
Yeah.
For sure.
Yeah.
All right, we could probably talk for 30 minutes on that, but let's just I'll kind of try to keep focus here. So, Jay, do you mind just kind of introducing yourself and your career in equipment finance, sir?
Yeah. So I spent about 2 decades with a large publicly traded bank, and in that role, I went through the different commercial ranking type positions and ultimately led the North Dakota region for this bank. And an opportunity with Choice Bank came up just over 5 years ago. And the CEO and I sat on the North Dakota Bankers Association board together. He had a need. My wife and I had a desire something different for our career as we looked at the next stage. And so I've been with Choice for 5 years. And I've been serving as a chief banking officer for the last 3 or so. But with that, Choice was going through some really dynamic growth, and it really fit with what some of my background was, for some of the excitement, the innovation that the company had. Kind of gave me some energy to be an institution where maybe the impact could be bigger and better felt for my family and I. And so it was an opportunity to do something different. But in my career, mainly in the middle market and business banking type capacities, always using and partnering with our equipment finance divisions of that company. And saw the value of that. So as we have grown Choice and done some different things inside of Choice, equipment finance was one of those areas we wanted to create an opportunity for our shareholders, our board, and our executive leadership team, as well as our team members, to really grow and change the dynamic of our company.
Perfect. So you transitioned over, to Choice middle of COVID, or?
It was May 13th of 2020, so right in the peak of COVID. It was an interesting time with how you interview, how you onboard, how you come into an institution. It was one thing that I started doing because of that. Coming into a company when you have restrictions, we have brick and mortar in 2 states, in North Dakota, Minnesota. We have about team members in about 20 states on a full virtual basis. So I actually, soon after I started, I block 15 minutes every Wednesday, and I call it Random Call Wednesday. And I call a random teammate of the company because COVID took away our ability to have social gathering, to have happy hour settings. Couldn't do a road show. Yeah, we had limitations. And so I've kept that behavior going, and it's been kind of fun to get to know the company. We have 450 employees throughout our footprint. And so it's a nice way to meet them, but I had to do it during COVID because you couldn't really get together. And it's a neat way to, get with teammates that you maybe don't work with on the daily, but it's how I met most of our team. And so it's been a fun practice to keep doing, learn some really good things about the company, how we can be better, where we're doing well, those kinds of things, what ideas are out there inside the company. And so we're small, we're nimble, make quick decisions, but it was a way for me to learn the culture of the company, because you take away a lot of cultural components, which we had to do during that time, right? But you take away a happy hour, you take away a breakfast or a team lunch, you don't get that kind of some people call them collision conversations, right? But going to use a restroom or get a soda, you kind of get boxed into your offices now. And now it's a way that we keep doing that actually.
So are these scheduled calls or are you just like random, like you just, and what if someone doesn't answer? Is there like a consequence for
No, no, they might call me back. I don't leave voicemails. I kind of, we use Teams, and so if their light's green, I call them and I pick a different person. Sometimes they get to nominate who the next person should be. And my favorite one I've had, Jesse, I did call a teammate that's on our compliance team, and she had her screen kind of covered with a little slide bar piece, and asked if I accidentally called her and asked why I was calling her. And so we served the team together. We're together. We're on the
flipping
same
it
team.
around a little, you're flipping it
Yeah.
around a little bit. Be like, where's,
Yeah, she
come
didn't want
on.
to take my call. Yeah, and so, but we still talk, once a quarter now, and she's helping our company. She's great at what she does. But she was like, "Why are you calling me? Who are you? I don't think you should. You didn't mean to call me." I'm like, "I did mean to call you. We were together." So, yeah, I've had a few like that. No one's hung up on me yet. Knock on wood, no one's hung up on me yet, and they all, and so I haven't gotten in too much trouble with doing it yet. But
Have you got
15 minutes
anyone
of
where,
fun.
have you got anyone where it's like, dude, where's my, like, do I get no love? Um,
Yeah, not yet, not yet. I think they feel more like victims and they feel like they've been awarded something. It's a punishment.
that's that's a fantastic idea and an awesome takeaway. I haven't heard that before, but definitely creative because yeah, I mean, as you mentioned, you had a previous relationship where you were on that board, but when you come in at that title, people are like, okay, who's this guy? And it's not like you said, you can't go out in front of people. So it's very
Right.
creative.
Yeah, thank you. It was a fun way to get to know the team and have some fun. And, we have core value. One of our core values: work hard, do the right thing, and have a little fun. And that little fun is what that random call Wednesday for me is. It's probably the best 15 minutes of my week because you catch somebody, they're doing something right. They might have an idea, a question, a concern, a challenge, and it's how we learn and grow.
That's really cool and creative. Thank you for sharing that story,
Yeah,
Jay. So you talked a little bit about choice. I mean, how long has the bank been around?
yeah.
You mentioned brick and mortar in a couple states, employees, like what, I know you're starting an equipment finance division, but what other areas do you guys play in?
Yeah, real quick history lesson on choice. So 2001, four small banks in Northeast North Dakota came together to become Choice Bank. Um, Almost 100% agricultural lending. So when I say agricultural lending, your farm input lines, your farm equipment, farm land, that type of debt structure and deposit structure. And so in 2001, the group came together. Our current CEO was the president of one of those four locations. A handful of years later, he became the CEO of Choice, and he wanted to expand out of just the agricultural space in the northeast of North Dakota, just concentration, limitations, growth aspirations. So he had a pretty ambitious growth strategy throughout the state of North Dakota. Some loan production offices, some de novos, a couple small acquisitions to really grow out of just agriculture and do agricultural and small business lending, and that 25 million less C&I lending kind of spacing. 2018, Choice bought a bank in Minneapolis called Venture Bank. And so that expanded our brick and mortar from North Dakota into Minnesota. And so that team group came together in 2018. And we also started in banking as a service. And that was one of the reasons I was attracted to Choice. Banking as a service, also called BaaS, also called FinTech. But easiest way that I like to explain FinTech, because some people don't know what that means or they get confused by what it is. A FinTech is a financial industry disruptor, right? Their single purpose is to find a need and fill that void. And so one example that I think is his easiest example out there is Uber. Uber, you and I were, when we were in Chicago, we Ubered together to the airport. Uber connects a driver with a passenger to a set destination. There's a money movement play that happens. Well, Uber has to have a bank behind it. Now, we don't bank Uber, but I use them as an example. But somebody's moving that money for Uber from you as the rider to the driver, and Uber takes its piece of the pie. Well, there's a bank that's on the chassis behind that in the sector. And so we bank entities like that. And that's what's led to our explosive growth on our depository side from this large liquidity play that we have, which has led to us to look at, yes, we still do agricultural lending. We'll never lose our core root that we are an ag bank at heart. That's a Main Street bank in rural North Dakota, rural Minnesota. So that's not going to go away from Choice's culture. We also do that small business banking group, your SBAs and all of that world. That's really important lending in the Main Street of, our communities. But we also started to go upstream into that middle market. So I would say that 25 million revenue to a couple hundred million revenue. We've hired some bankers in that spacing, which is, like I shared, part of my background is in that middle market group. And so we've really tried to grow that part of our business, which is in market banking and thinking of your treasury management for, the business's money moves, their operating lines, their real estate, their equipment, non-owner occupied real estate. We do all that in the local sector. But because of banking as a service, creating this vast liquidity for choice, we had to look at that national customer base that we're picking up and putting it into national lending. And so we started 3 national lending platforms, one of which would be agriculture, because we're an ag bank, right? So we do input lines for clients throughout the country. So these come to us, through different sources, but we are doing their input line for that year throughout the country, not just in North Dakota, Minnesota. We also have a national self-storage business we began. The same time we started the equipment business. And when I say national self-storage, the people that we are banking in that industry, that's really their W-2. That's what they're doing full time. This isn't someone that's buying just one off here or there as an asset place, but they have a host of these portfolios, large publicly traded REITs to large family funds to individuals that this is their livelihood. But that's that client base. And so we're doing those throughout the country. But then last year, we also started this national equipment syndication buy desk. And I just like to point out, we're not a direct originator. We're only looking at participating in the syndication space. So we're not originating the equipment debt. We're only buying the equipment debt from partners. So far, we have 5 partners that we are actively buying from. And so when we looked at this liquidity, how do we solve putting national deposits into the local markets? And we do that well. But then also, how can we put them in a national market? And so with our equipment finance business, we teased about Gary to start, but Gary helped us with the idea of how would Choice do this and what would be a way we can go to market, we can find a niche in this spacing. And with his direction and perspective, we hired a man named Frank Costanza. And just not to be confused, he is not George's father, like in the TV show Seinfeld, which is actually named Frank Costanza. No confusion here, Jesse.
Where
no
my
confusion.
mind went. It's where my mind went, but
he's a legend in the industry of sitcoms. But he's also really well respected in the equipment business. So I didn't know, you might not have known that, but he's well respected. No, he spent quite a bit of time in some large banks, some publicly traded banks, as well as an independent equipment finance background, both on buying and selling. So he's been on both sides of the transactions. But Frank came to us, and so last year we really started this business, and we're kind of in that crawl, walk, run mentality when you start up a new business. And I would say that our equipment business is still in that crawl stage. We're working towards the walk because we're just over a year into it. We've learned a lot. We've added some new partners throughout this year, but we also have a controller that came to us that has a rich history in equipment business. Our legal counsel, our in-house legal counsel, has a rich history in this. We just hired a new CFO who has an extensive history in equipment business. And then we also hired a credit asset to help Frank on how we structure our credit policy, our kind of approval grid model, that processing. So all those hires have come on in this last 2 years. And so it's really helped form with, I would say, a very deep history of teammates that have experience in this industry. And now we're looking, we just hired someone in to help us build the operational communication system between our customer, which is another institution, and all of the, whether it's a single transaction or a portfolio they're sending over, but how does the data come to Choice? How does the data get consumed by Choice? How does it go through our underwriting grid model? How do we communicate back to the provider? How do we document and get the money movement process happening? And so that's in flight right now. So we're probably 6 to 12 months away from that being fully operational. That's why I say we're kind of in that crawl stage. So we're not actively looking for a lot more partners at this moment. We really want to take care of those we've already partnered with, but we do have a nice deep kind of list of people we're targeting that are asking us to begin doing business with them. And we look forward to that opportunity as we get ready.
And from a, I guess, asset, is this going to be more ticket size driven or collateral driven?
Yeah, right now we would say we're a small ticket purchaser. And so I would say that $100,000 to $500,000 space. We are seeing the bulk of our assets we've purchased so far have come from a portfolio, but we certainly are seeing single transaction flow come over as well. And so asset wise, we're seeing a little bit of everything. There's a few industries that, ELFA is giving some guidance on being careful with. And so we're, listening to their guidance as well as, what Gary or Frank would have an opinion on. But
Sure.
I would say that we're kind of asset agnostic at the moment. We haven't really, there's a few
Uh,
industries we're probably shying away from a little bit based off of some of what we're seeing in the market, but we want a nice balanced portfolio. We don't want to be concentrated in one asset class. And so the partners we're picking up, and what they're sending and submitting over for us to review for approval is pretty diverse. It's not one asset class heavy.
Got it. And then I guess, sorry, I'm just gonna keep asking a few questions on
Yeah.
uh credit perspective, just looking at A plus paper. Like, is there any specifications you guys have for that?
Yeah, the credit grid, we go A to C on the grid, but we really want the bell curve of, don't want a whole lot of C rated paper, looking a lot of A and that B plus kind of model. But, I would say that the bell curve is real, right? If we could have, it's an inverted bell curve. We have 30% A, 60% B, and 10% C. Some version of that would be pretty real.
Absolutely. I'm sure if the right ag business kind of fell and it was C plus, you had to take a consideration on it, right?
Absolutely.
And question on the self-storage.
Yeah.
We were talking about that before. So all the self-storages that are popping up, I mean, I think there's one actually not too far from my house. I'd probably hit it with a pitching wedge. Um, those are all a different association. Like, is the financing like the build out of those, or is it just track? I don't know much about that, so it's
Sure,
more just
sure.
inquisitive on what
Yeah.
that looks like.
So what we're financing on those, if they're a ground up construction, think of it as apartment complex, the same concept. You're buying the dirt, you're building vertical. And so, we are doing the ground up construction, or we're taking those that are already established properties that are due for a refinance because of a ballooning payment, or someone is acquiring an existing asset. This asset class gets traded a fair amount where, these different capital needs that the business might have. So we're financing them from soup to nuts. So it's ground up construction. It's existing established properties, maybe some that were established, but they need a little longer lease up window because the market saturation was off on their assumptions. And so it's an interesting business. But to me, it's very similar to the multifamily space. So no different than where you live now. I'm sure there's an apartment complex going up near you as well. And you question, are they going to fill this up? Where are these people coming from?
Like,
And
what?
yeah, it's different. Well, I will share with you, being a North Dakotan, I was down in Phoenix and I was looking at the first one we were going to do. And as we're driving through, I'm talking to the banker. I'm like, there's one like a mile that way, and there's one that's 4 miles that way. And he drove me through this neighborhood, and I was shocked by it because in North Dakota, we don't have the HOA, oversight on much of our housing development. But as we drove through this neighborhood, I didn't realize that in the Phoenix market, um, you can't leave vehicles out overnight. You can't have anything in your yard or your backyard. And the sun is very hard on product, right? And so I was so surprised that it's all about household or a house count. So they do rooftop count and they look at the absorption rate into those models. And so it's an algorithm basically that comes through and says this market needs it based off of these conditions. Where in North Dakota, we all have 3-stall garages, we have sheds, we have space, it's
You might have
different.
you probably have basements too. I mean,
Yes, we do have
very
basements
few
too.
houses
Yes.
out here have basements. So typically people use the garage as storage, so the cars
Yeah.
have to go somewhere.
Yeah, I was shocked by it. I mean, it's very expensive Christmas tree storage, as I call it, but
Uh,
it's a market that's there, and we've really had a great run in it so far. And Michael Christopherson is who we hired to run that business. He's out of Chicago, but this is what he spent his career financing. And so, his connections into the industry are like Frank or Gary's in the equipment industry, where they're well known, respected, and so he's led us into some really nice opportunities. And it's an interesting business, but we're a lot of them are in the Florida, Texas, Arizona markets. That's where you see a lot of the population, and so it makes sense. But the rooftop count was a different model for me to kind of understand. That's something we're measuring for a self storage unit. So I enjoy my role where I get to learn every day as well, because it's something you don't know until you really get into it.
sure. And I think my town is one of the fastest growing in the country, Queen Creek, Arizona.
Yeah,
So I definitely see why. I mean, like you said, there's 1, 2 miles that way. I think it's a U-Haul one. And there's one popping up over here. It's just like, okay, okay. Like you said, people need to store their Christmas trees and stuff.
Yeah, yeah. So everybody's got something to put in there, right?
That's fair. That's fair. Well, thank you for talking more about choice there,
Yeah.
Jay. So I guess starting up, an EF division. Let's talk about that if you don't mind, as opposed to like a well-established one. You probably came from before.
Yeah.
Pros, cons. I mean, anything that you would be doing differently than when you started this process? I mean, hiring Gary was obviously rock star choice. So well done with hiring. I guess Gary Swift. We'll just switch his
Yeah,
name.
there you go. Gary Swift. We'll call him Gary Swift. What we look at on our balance sheet is we want to have, just like the equipment finance portfolio, I talked about one nice balance to it. We want a nice balance to our portfolio when we look at what is in real estate, what is in agriculture, what is in equipment, what is in operating lines. And so when we looked at complementary strategies of if we're going to go national, the agriculture input, that's our bread and butter. That's how we really started the bank. We're going to continue that commitment to that part of our business. And that duration matches up really nicely with some of our partners on the Bass business modeling. Well, we looked at other product line that we could look at, and the self-storage, it's typically be something we'll hold on paper for maybe 4 years, and then they'll take it secondary market, and we'll replace that ground up construction or that portfolio moves. The equipment business, right? You look at, you might do a 5-year term, but most of these businesses are cycling that in that 3-ish to 3.5-ish year window. And so we wanted the durations to match our funding source as well as complementary strategies. So we weren't overly concentrated in one business line. So we want to grow these. I mean, next year, the target would be that the EF business gets to $100 million in outstandings. And we should finish this year, I'm going to guess around 65 to 75 million. We're very happy with that but you asked some learnings. One of them was we're very manual right now. And so, it's hard for our team to take on a 200 file portfolio, and they're working hard. They get through it. But as we partner with this third party that we brought in to help us build that automation set, that's going to make the lives of Frank and the team he's working with easier to scale that business. And so I think the learning for me is, and we kind of want a proof of concept we could do it before we made that type of an investment. And so there's that pro and con concept of if we would have built it, will they come? I don't know. And so we went down the path of let's just see if we can even get this process going. And we have it going. It's going well. It's probably not as smooth as Frank would like it, but we'll get there for Frank. And our partners have been very patient, very helpful to us in this journey of building up, and we've been able to be responsive to them. But we want to be better for them. And so before we go add 5 or 10 more partners, we want to have that process, I would say, more streamlined. So it's better for them, better for us. And everybody wins in that scenario. So it's been a learning curve for our team, but we like the balanced portfolio mix. We like the opportunity that it matches our funding sources, and it sets us up for a nice diverse balance sheet.
That's fantastic. I like the methodical approach to it as opposed to just going in and dumping a bunch of money in something where you're just like, okay, are we going to get the return that we want? And I mean, let's get it dialed in for 10 before we open this up at 20 or 30. So fantastic.
Right. Yeah.
And then what's it like kind of building, your own team, bringing on Frank, and others?
Joyce has always been an innovative, forward-leaning mindset institution. And so when I look at, I'll share this with you. Our board of directors since 2021, we were challenged by our shareholders. We were challenged by our regulators to level up our board. 80% of our board has turned over since 2021. The talent that's come on a Choice Bank's board is off the charts fantastic. And with that, our executive team has leveled up with some new hires in different roles that we needed. Well, that then leads to innovation ideas of how can we run the business differently. So the excitement to find someone like Gary to come in and help us build this and use his network and that trust factor he has, bringing in Frank with his background, Michael with his background, and others we brought in, the energy level of the company just goes vertical because everyone's excited to be part of something that's not going to forget its roots, but is doing more than just its roots. And so we use the phrase often at Choice, we're a hybrid bank. And when we describe hybrid, when I look inside of just the traditional bank group, which was I have the privilege of serving that team. Well, we do agricultural lending, we do C&I lending, we do real estate lending, we do some national lending. That's multiple income streams, right? It's multiple customers we can serve, but not lose the fact that we're still a local community minded regional bank. And then our BaaS business is that innovation side of these disruptors in this industry. We wanted to capture some of that market share. And so when you bring that together, we view ourselves as a hybrid bank, which leads us into that excitement of bringing in new team and new talent to really continue to grow the company.
Perfect. That's exciting all around, Jay.
Yeah.
Um, so I've seen you at a handful of ELFA events. I know it's hard to walk from point A to point B with Gary on your side, but that aside, what are your thoughts, on the equipment finance industry?
I was talking with Gary about this, and I said it's interesting when I've been at a couple of these events and how respectful the competitors, the vendors are to one another. It's almost like a fraternity and sorority had a mixer and said, let's do equipment finance lending. Let's start this business because everybody seems to know everybody. Everybody kind of knows their niche. They have their passions for what it's at, but the camaraderie inside the room surprised me. It was just truly a blessing to see that this room is full. The team has known each other for a long time. They might be competitors on one deal, but they're partnering on the next deal, and there's not that animosity in the room. And so, in the collaborative learning and sharing, and even what ELFA publishes, right? Everyone sees it, everybody can opine on it. But the camaraderie inside that room to me was probably the most fascinating group because I've been to American Bankers Association events or North Dakota Minnesota Bankers Association events or RMA events, and you don't see the same level of camaraderie across the board as I saw at that ELFA. It was just interesting to me, and I shared that with Gary. It's such a small, tight network, but they're all really working towards a common goal, which is to help these businesses have success in their equipment procurement and structuring in the right way and going down that path. And I'm sure there's some that always aren't the best of friends, but collectively you don't see it. It was, to me, it was such an amazing event to see that level of camaraderie.
You kind of hit the nail on the head. And August 5th made 20 years of me being in this industry. And,
Okay.
it's one of the reasons I think a lot of us call it the Hotel California, right? It's
Yeah.
like once you get in here, you do right by people, you have a good reputation. I mean, I sold software for 10 years, right? I think I made a choice on who I was selling for as opposed to partnering with.
Yeah.
You sit down, with your competitor that maybe you just beat them on a deal or you lost a deal too, and you're still having a drink talking about, hey, what about that other one that we both missed out on? Or, God, I can't believe you guys got that. I thought I had it. Like, better luck next time. And it's
Yeah.
all across the board, right? And because regulation impacts all organizations, what can we do as
Absolutely.
opposed to you building it yourself and keeping it to yourself? It's like, no, it's better off where it's like, how does this impact ag? How does this impact, other lines of business? And it's just
Absolutely.
for the greater good, I guess. I know it sounds
Yeah.
kind of corny, but
I'm with you though. It was unique because I've been to a lot of banking conferences where, the larger institutions won't associate with the smaller institutions, or the independent institutions, and or if they do, it's adversarial-ish. And in this one, I mean, it was exciting for me to sit at a table and have all sides of institutions sitting there, all talking about war stories and challenges and industry things that happened, and what was going on, and they're sharing knowledge, or partnering together, and talking about how they can partner together as opposed to, just that adversarial nature. So it was good competition discussions as opposed to maybe that adversarial competition discussions.
yeah, definitely, hopefully scarcity is not, there's enough to go around. Just
Absolutely.
face it. Nothing
Yeah.
wrong with some friendly competition, or what
No.
is it? Frenemies? Is that a
Frenemies.
good,
Yeah. Yeah.
is that a good phrase?
Absolutely.
Doesn't it doesn't make up for Gary Swift.
No, Gary Swift's about as good as it gets. And
Yeah,
I think I should trademark that and get a 50 cents every time it's used or something. I think I could add that to my kids' 529s or something.
fantastic. Let's see if I can get ELFA to change his name badge. We can have some fun. Okay.
That'll be fantastic. Please do.
Excellent. Jay, you mentioned the acronym BAS a couple times and how that impacts like on the fintech side. Um, how does that apply to equipment finance?
Yeah, yeah. I guess to round that question out, I know I've used that a little bit. So when you think of the Uber example I provided, right? There's that monetary position of those deposits sit there and the bank is holding that. Venmo is another example, right? There's money sitting in that Venmo account. And so we hold those types of accounts. So that creates a deposit base for us, which is why we started those national lending strategies, the one ag, the one self-storage, and now equipment finance. And with that growth, we need to put those deposits to work. And so when we look at the growth of that business and what it's done for us, um, it's literally about $7 billion of deposits that we have access to that we need to put to work. And so that's why we started these businesses. Again, we're in the crawl, walk, run stage of all three, and they're each on their own journey inside of that methodology. But equipment's a passion of ours because it feeds the small businesses of the country. And as a community-minded bank, we need these small businesses in order to survive and thrive in our environment. And so we have these national deposits. We're going to leverage those on national lending and local lending. And so for our equipment business, as we get more sound with that operational process I was talking about, we then need to go from 100 million of equipment purchase to 250, and from 250 north of that. And so that's why the model makes sense. We can stay balanced with our portfolio of real estate, ag, and equipment, but we need to grow that vertically, and we have access to that. And so as we continue forward, as we can operationalize this business and the other two, this can become a much larger national lending strategy for choice, and it can add maybe $1 billion to the discussion point as opposed to million.
Thank you for clarification on that. I now see how that can definitely impact, especially as you guys want to deploy more of that throughout the
Yeah.
industry. I do ask everyone who comes on this program to give me a little fun fact about themselves. So I guess, what do you enjoy doing outside of work?
Yeah. I'm pleased to tell you my wife and I celebrated our 21st anniversary at the end of July. Thank you. She's lucky to have me. As I tell her, Jesse, she might beg to differ. But we have three beautiful sons that are 15, 11, and 9. My wife might submit that she has 4 sons if she puts me into that mix, which is probably sometimes appropriate. But they are involved in hockey and baseball, and our youngest is still doing hockey, baseball, and football. So what I used to do for fun has converted to having fun and chasing my kids. And they're on a ball diamond or a hockey rink pretty much every weekend of the year. And so the friends and family that we have met through those sporting events, but to dig into double click on that one spot, I love to cook, and so I typically bring 2 to 4 grills with me to every one of these events, and we grill for our team and the friends and family, extended family that show up. So most ball diamond weekends, we're probably cooking for 40 to 60 people. I despise team meals at a restaurant because somebody's food's messed up, it's slow, it didn't get delivered right, and everybody's frustrated. So we grill at the hotels or at the diamond or the rink itself, and that is probably my fun thing that I get to do while chasing my kids.
Fantastic. And the grills go in the car, not the kids on the
Yeah,
roof, right?
correct. Yeah.
But
No,
vice versa.
well, sometimes I should strap them to the hood like a good ornament, but yeah, the grills go in the back, and it's a lot of fun. And that builds the family, the culture though of these teams, and the camaraderie that builds with that, and that is where I just feel like Choice and my personality align so well because that's our culture. We bring the group together. We're people first, banking second. Like that's one of our mantras is people first, banking second, because people want to do business with people they trust. And that's why when we brought in Gary, people trust Gary. Gary was going to get us set up the right way for success. Frank was going to get us set up the right way for success. And each of these roles we brought in, it just really helps that. But that camaraderie is what creates that. And so that's kind of Choice. That's who we are. That's why we like doing business with our clients.
Perfect. I mean, I think you just went ahead with the why do business with you guys question right there. So unless there's
Yeah.
anything else you want to elaborate on.
No, sir. I appreciate the time.
No, Jay, it's been a pleasure. I know we've spoken a handful of times, but it's good to get some more time to kind of drill down into your background and what you guys are building at Choice, and excited to see the walking run portion of the equipment finance side in the near future.
I am with you on that. We are excited. I will let you know when we are on the run stage because we're going to need your help.
Sounds good. And then, whatever we do, G Swift is going to have to, we can keep having some fun with this, come out and we'll figure that out
Yeah.
too.
Yeah. He's going to really appreciate this. And Frank Costanza from Seinfeld. I mean, we're just cracking jokes today, Jesse, but we got to have a little fun at work, right?
It's what it's about. And after this, you're going to, it's a Wednesday. No, it's a Thursday. People don't know. It's going to be released on a Wednesday. Maybe he's going to call you. Careful. Never know.
Yeah. Yeah. I look forward to that.
All right, Jay, I really appreciate your time, sir. Thank you very
No, I
much.
appreciate yours.
And look forward to seeing you probably Marco Island, the end of October.
I don't think I get to go to that one. I think it's just Frank. I have a conflict that week with some board stuff, so I will not be able to attend that, but Frank will be there. I don't know if Gary's going yet. I haven't confirmed with Gary if he's attending or not. But I will be in Chicago in March. I know that.